When you come online and watch a video about candlesticks, you go back to your computer and they make no sense to you. Here is what I will do. I will go into my computer, I will open the trading platform, and we will be looking at these charts together. It will be as though you are standing behind me and I explain to you what is going on, because we will be looking at these charts live. Hello, if you're new to my channel, my name is Herve and my job is to make you understand crypto. Now, I understand that there are many people who do not have any idea what crypto is, how it works, and how to invest. But now, the foundation of your investment is understanding how price works. That is why these videos that I make on candlestick analysis are very lengthy. You have to understand how exactly price works before putting your money into the abyss. Your money could literally go to zero. Your understanding of candlestick charts is the foundation of your investment. That is why I place a lot of emphasis on these videos. Because this video will be a very lengthy one, I will leave handy timestamps below. You may click on any of the timestamps and jump onto the section that interests you the most. But just know that watching through the whole video will help you and will help me. And also, make sure to click the like button and subscribe to the channel if you are new, because I bring tutorial videos on cryptocurrency every other day on this channel, which are explained in the most simple way possible. You will not get it simpler than this. So, let's jump right into this, shall we? Let's not waste any time. You must have seen this page and you have no idea what is going on here. You know how to buy and to sell your coins according to the other video that I made on Binance trading. If you haven't seen that video, I will leave a link to it right here in the top right. You may check that out. So in this video, we will try to explain what is going on here and how you can use this information to know when to invest and when to take profits. By that I mean sell. Now, there was someone who left me a question on TikTok that when you want to sell your cryptocurrency, is there a must that you will have someone who is willing to buy it? And to that I say that is the reason why we have this. And here you have people who are selling crypto. Here you have people who are buying crypto. And so you place an order. When your order reaches its mark, let's say if you want to buy crypto, if you want to buy Bitcoin for 44,765, this means US dollars. This is a stable coin. So we all understand what that means. You have to watch the other video so that we don't make this video longer than it has to be. So when you want to sell your crypto on a platform like Binance that has a lot of liquidity, it will immediately sell at the price at which you wanted to sell it for. For example, if you place a selling order here, because this is where you sell and this is where you buy. So if you place a selling order here at say 50,765 USDT and it reaches 50,000, that will be around here, it will immediately sell. Immediately. It is not like there could be a way that maybe it did not sell. No, it will immediately sell. This is the reason why the platform you are using for trading is very important. Because if you are using a platform that does not have high liquidity means that there are more people trading on that platform. Your selling order may not get approved. So if you're trading on a platform that has low liquidity, that means low volume, you don't have much people trading on that platform. The time when you need to sell your crypto, you may not have someone willing to buy that crypto at that given price. So this goes ahead to explain that anytime you wish to sell your cryptocurrency, there would be someone who wishes to buy that cryptocurrency at the exact price that you want to sell it for.
Now let's look here as our example. What is going on here? These are the people trying to sell crypto. So this person here has a selling order for 4,586, 4,580, 4,585. These are people that believe. They are looking at the price here and they want to sell before it continues going down. So they are trying to get out of the market. Or maybe these are just people that made some serious gains. Well, in this case, they are not making gains because we can see what the chart is showing us here. So that is basically it. When you want to sell your crypto, if you are to invest, because this actually is a big problem with most people that are trying to invest in crypto. Some people are afraid that they may not get someone who wants to buy their crypto at the time they want to sell it. So do not be afraid of that. You have other things that should scare you, but that cannot be your problem. Yeah, anytime you want to buy crypto, you are also buying it from someone, and the time when you wish to sell, someone will also buy it from you. Binance is just the broker. So this is the platform where buyers and sellers meet. Okay, so it has nothing to do not worry that you may not get someone who wants to buy your crypto. So the issue of leverage trading, using leverage trading, you are borrowing money from Binance. This is going to be a long video, but I really need to explain some of these things that bother some people. You in leverage trading, you are borrowing money from Binance and you are trading with that money. Okay, so if you borrow, if you are trading with a margin of say 10x, it means that if you started with $1,000, that $1,000 will trade as though it was $10,000. So it will literally be $10,000. Binance will give you Binance will make that $1,000 $10,000. So if you make profits, you get to keep all of it. But if you lose, Binance will liquidate that money with respect to the margin that you took. So a 10x margin means that if you lose by 10%, that $1,000 will go to zero. Binance will liquidate the $1,000. So it's like if you gain, then you are multiplying your gains by 10. If you lose, you are multiplying your losses by 10. So it is a very risky game, which is why they do a lot of stop losses. Now, bear in mind, even in spot markets, you can also do stop loss, which we are going to see later. You can also use stop losses even when you are doing normal spot trading. So this is the spot market. Here you only invest, and your gains are your gains and your losses are your losses. There is nothing amplifying your gains and there is nothing amplifying your losses. Okay, so this is actually, crypto is risky enough. If you're investing in crypto and all you are concerned about is multiplying your money by 10 or by 20 on margin or leverage trading, that is pretty dangerous because you can lose your capital at an instant. It is not something that you want to play with. If you invested here, let's say now Bitcoin is trading at $44,386 now for $400. Now if you invested here, and Bitcoin goes to 47,000, you are gaining about $3,000. But let's say you invest here at 44,000 and Bitcoin comes down to say 40,000, you are losing $4,000. But all you need to do is just wait. Okay, you'll just have to wait and Bitcoin will come back to your initial investment and you've just made your money back. So it's not really loss. It's only loss because we are looking at it from the business perspective. Because if you did not invest there and say waited and it went to 40,000, and you invest there and it comes to 44,000, then you'll gain. So the loss in the spot market is simply necessitates patience. You only need to be patient enough to wait that the crypto can arrive back at the investment that you made. Now this is another problem when you're investing with meme coins. It may never come back there. That is why I discourage investing in meme coins all the time. Now, bear in mind, Shiba Inu took people from $2 to $1 million. It's not, this is real. Shiba Inu literally took people from few dollars to $1 million. That is possible. But the problem here is that whatever investment you make, there are people that saw other people live from $1,000 to $120 something million, and they invested $10,000 and lost it all. So I think losing $10,000 is not something that I will be happy about, even if I think I would have made hundreds of millions of dollars. That is not something I would be happy about. Anyway, let's go right into the first thing. Well, that was just the beginning. When you open your trading chart like this, if you open your Binance account or any other account, what you should look at first should be BTC. It should be Bitcoin, because if Bitcoin goes up, your investment in any other coin could go up. Now, this will depend on the coin, of course. But generally, all other coins pump when Bitcoin pumps. If Bitcoin is pumping steadily, every altcoin will pump heavily. If Bitcoin is pumping heavily, every altcoin will mildly pump. Why is this? Because all the money, if Bitcoin is pumping heavily, like if it leaves 44,000 now and it's headed to say $70,000 to $100,000, that is a lot of investment. It means that all the money, or most of the money, or investors are taking their profits from altcoins and they are investing more in Bitcoin, which means altcoins will not pump that much. But if Bitcoin is pumping steadily, it means these investors are taking less of their money in altcoins and investing in Bitcoin, which means altcoins will pump. It means they will have time, or they feel safe and secure enough to invest more in altcoins. So the first thing you should be looking at when you want to do any investment in crypto is to look at Bitcoin's price. Bitcoin takes up majority of the position in the cryptocurrency market cap. So Bitcoin's price influences every other altcoin's price. If Bitcoin is dumping, every altcoin will dump. So if you look at the graphs, if you look at the charts in any of these altcoins here, you will see this candle. You will see this candle indicating that Bitcoin dumped. Bitcoin initiates every dump. Some of them may dump individually, like if we hear like the sudden crash of Solana when its systems were not working properly because of a lot of congestion in its systems could not handle the kind of traffic that was coming for it. So there was a crash in Solana. Now that happened only to Solana, while Avalanche and Algorand were pumping. So you have to know that they can pump or dump individually, but when Bitcoin is pumping or dumping, it will affect all of them. So if there is a coin here that is pumping, when Bitcoin is pumping heavily, they will pump, and the ones that were dumping will dump harder. So that is the first thing you have to have in mind. Always look at the price of Bitcoin, and I say this from experience. Always look at the price of Bitcoin before investing your money. The second thing that you have to look at is the trend. What trend are you in? To know the trend, you have to look at the weekly time frame or the monthly time frame. You have to start looking at the monthly time frame. So here we will go here, and here is the monthly time frame. So here is the monthly time frame. What does this mean? All of these candles that you see are candles that represent every month. So one candle here represent price action in 1 month. One candle here, as you see them, represent price action in 1 month. So if you count from here, 1 2 3 4, all of them, if you count all of them here, you will notice that from the time it was here to here is the length of time that Bitcoin has been active on Binance. So Bitcoin was listed on this exchange here. That's how you know this. It was listed on this exchange here, and we are here now. This is where we are, here. You can see the price there, 44,300. That's here. That's where we are, here. So this is where we are, and the crypto was listed here. Each and every candle here represent 1 month of price action. If we go to the weekly time frame, why are we looking at these candles from the monthly time frame? So that we can know how the past month was with respect to price action, how the previous month before last month was with respect to price action, and the other month was with respect to price action. When we look at these candles, considering our knowledge of candlesticks, then we can know how the next month will be, or how this month will be. Here, if you haven't watched my video on candlesticks analysis, which this will be the last one of that, not really last, but this will be the last major video on the candlestick analysis. I will leave a link to the previous video up here. You may check it out. So we know that this candle closed here. Let me make it bigger. Each and every candle here represents 1 month of price action. So in the 4th month before this, we had this candle, this giant candle, and this, we know that red means sell-offs and green means buy. So this was a very fruitful time. Damn, this was a real time. If you invested here when Bitcoin was at 10,000, I hope you can see the price around here. If you invested here when Bitcoin was at 10,000 and sold here, you would have made more than $40,000 if you invested here. So let's start with this candle. We know that red candles close below and green candles close above. So here we know that here is where the candle closed. Here is where the candle began, with this giant candle. Okay, with this candle, here is where it closed and here is where it opened. So this candle indicates that the price opened here, went up here to 64,000, and this was the all-time high of Bitcoin. This is the maximum price that Bitcoin has ever reached, $64,854. So it went up here in that month. Remember, we are in the monthly time frame. It went up here to $64,854, came back down here. Now it may have gone up again and come back down, gone up and come back down. It's not like it has to happen only one time. It can happen as many times as possible within that month. Now all of this is 1 month, all of this is 1 month, all of this is 1 month. Now from here, let's say it came down here and buyers took the price up again here, and that month closed here. We can see here, this is the, hopefully you can see this. This is the 1st of April. Here is the 1st of May. Here is the 1st of June. So this represents 1 month. It means that this candle closed here in April and opened here in May and probably went up here and went up here, not probably because the candle shows it, and went down. This was a massive crash. I hope you guys can see because the candles are saying it all. You can read the price history of Bitcoin by looking at these candles. You don't need to ask anyone. You can just look at these candles and you can understand exactly what went on what month if you can read them. And I hope my explanations are good enough. If they are good, please smash the like button because that really helps this channel out a lot, and leave a comment if you understand. Also, you can share this video with anyone you know that would be interested in understanding crypto. So here the price left, it had a bounce from here from 30,000, so it descended from here to from 64,854, closed here in that month at 57,000. Hope you can see my mouse. Closed here at 57,000, came here, went back up to 59,600, and came down here to $30,648. Now from here, a lot of people came into the market to buy because, well, it was really cheap, and then it came back up here, and then it closed here at $37,269. Now that was done for the month of May. In June, we had another problem. It closed here, opened here, increased to 40,000 and dropped to 29,000. I think you all no, it dropped to 28,000. Yeah, I remember buying some coins here. when Bitcoin was at 28,000 because every other coin was very cheap. Cardano at this point was at $1.20 here. Polkadot was at $13. Now we know Polkadot is about 30 something dollars. Now we had this month was a good month. This was July. We had an open here. It came down here. This week shows that the price dropped here. The buyers took the price back up onto here, and the sellers pushed the price down to here, and the candle closed. So this month was a good month. Here we see that the price here was a bit of indecision. Yes, there was a bit of indecision here. Here the decision was made because we see that the bigger body indicates that the selling pressure was higher than the buying pressure. So there was a lot of selling taking place here. That's what went on. That's what happened here. And here there was also indecision of these people that sold here. Some people saw this, they were confused. There was indecision here also, that but why did we sell this? So, and here buying pressure increased, like everyone was buying this dip, buying Bitcoin at 28,000. Remember, now it's at 42,000. So anyone that bought here has made a lot of gains. Anyone that bought here has made a lot of gains. Unfortunately, I know of some people that sold here, that sold Bitcoin here, thinking that it will go lower and they can buy, but well, it did not go. It bounced back up here. I think if they're smart enough, they would have bought here. I know of a guy who sold here, but he bought around here, so it's not bad. It was triggered by his stop loss. Anyway, so he bought back here and he rode this wave right up till here. So we see that the price starts to increase. The thing that happened here is the same thing. Now the thing that is happening here is kind of the same thing trying to happen here in the month of September. We are now in September. So this was July, this was August, this is September. And we see the long weeks here, these weeks here. And many people always get worried when they see this, and so they think the market is about to crash. No, this we are operating in the monthly time frame. So when you look at it from outside, from the zoomed out view, you actually see that the prices are going to rise again, because it went up right here, and now it is here, and now it is here on the 20th of September. Now what you have to understand is that when you leave from the monthly time frame, now I'm not gonna tell you guys something that I don't do. I seldom look at the monthly time frame because, well, I operate in the daily. I operate mostly in the daily and the hourly. If I'm to trade, I will operate in the 4-hour, 1 hour, and 15-minute. I only look at this to know what the future holds. So let us zoom in. When you leave from the monthly and you're going to the weekly, you are zooming in. So let's zoom in and see what is going on in this month in weeks. So if we zoom in like this, every candle here represents 1 week of price action. So 4 candles, like 1, 2, 3, 4, represent 1 month. So this is September. We can see the date. We can see the date here. This is the month of September here. So every candle here represents 1 week of price action. So 4 candles will represent 1 month. Unlike here, 1 candle represents 1 month. So when we zoom in, 4 candles will represent 1 candle here. So 1 candle here will be broken down into 4, telling us what was going on in each week of that month. So here, if we come here to the weekly time frame, when we click here, I'm saying this because I really know that there are some people who do not know this. And it's not like I am saying that everybody does not know, but this channel is to help people who do not know also know. Yeah, so here, every candle represents 1 week of price action. So 1, 2, 3, 4 is the month of July here. This is the month of July here. This is the month of August. 1, 2, 3, 4. This is the month of August. So these 4 candles have been, this 1, 2, 3, 4 have been put together to make 1 candle and represent the price action of 1 month in the monthly time frame. So each candle here represents 1 week, but in the monthly time frame, each candle represents 1 month. So 1 month's candle has been sub-broken into 4 and represented in terms of weeks. So let's say you wanted to trade in weeks. You can see here that we have a hammer here, and here we have another hammer. So you can use these candles and know what is to come in the other weeks. Remember, I did say that there are other things that contribute to this. So you cannot only use the candles, you will use this volume, and I will explain this later on, what these bars mean, because they are a crucial part. Candles can show one thing and act differently based on what you see here. So each candle here represents 1 week of price action. So let's zoom in again to the daily time chart. Each candle here represents 1 day of price action. So if you count 30 candles, you will get a month of price action for 30 candles. If you count 7 candles, you will get a week of price action. And if you count 365, then you will get a year of price action. But crypto is not that old. You can't do that with crypto because, well, how many candles will there be? Maybe 1 for some cryptos, maybe 2 or 3. It won't make sense. When crypto will be, say, 50 years, maybe we will get a yearly time frame candle. But who will be investing with respect to years? Anything can happen in a year. So even using months, anything can happen in a month. Every candle here represents a day of price action, and the 4-hour time frame represents 4 hours of price action. So each candle here, from here, this is 4 hours. This is how the price went in the last 4 hours. This is how this is what happened in the last 4 hours. This is what happened in the last 4 hours. This is what happened in the last 4 hours. This is a spinning top here. This is another spinning top. Yeah, and this is another spinning top. This is another spinning top. If you watched my last video, then you recognize what this is. This is a bearish engulfing pattern. This is telling us that price is going to go down. Hey, guess what? That's what happened here. Yeah, so that's what happened here. So when you see this, you know that this will happen. If you see the inverse of this, then you know that something inverse to this will happen. This also is a bullish engulfing pattern, but if you notice, the wick here is too long, so this is not really a bullish engulfing pattern. But if you see this, you start by what you see first. What you see first here is a damn bearish engulfing pattern, and the EMA lines support it. Now I will explain also what these lines mean, of course, because when I started I was also bothered that, but what are these lines? Are they just like there for decoration? So that is basically what is happening here. If you go to the hourly time frame, every candle will represent an hour of price action. So this is what happened in 1 hour. This is 1 hour, 1 hour, 1 hour. So if you can count these hours and times how many hours are there in a month, you will get exactly what has been happening here in a month by hours. Basically that's it with this time frames. This is a 15 minutes time frame, so each candle here represents 15 minutes of price action. So basically that's it. So let's go to the next thing. I will use the daily time frame here for your understanding so that we can get a bigger view. Now another thing that you have to understand is that when you even think of investing, which we have already said, your first is to look at Bitcoin, which means every investment that you make in crypto should start from Bitcoin. Do not venture into a cryptocurrency because everyone is talking about it without looking at Bitcoin. Always look at Bitcoin, because when you examine Bitcoin's chart, if it shows that Bitcoin is moving laterally, it is safe to invest. If Bitcoin is dumping, if you are somewhere like here, do not invest. No matter how convinced you are, better avoid losing than putting yourself in a risky situation just because you think you will make some gains. The second thing that you have to look at is the trend. That's the second thing you have to look at. After looking at Bitcoin, look at the trend. Are we in a bullish or in a bearish market? So as we look at this chart, this is headed upwards, so we know that we're going up. Now let's take the 4-hour time frame so that we can get a better view of it. When you see this chart, what is it telling us? That we're going here, we're going up. Here we're dumping. Here we're going up. We dumped a bit here. Here this is going up, which means here you can buy somewhere here because you know that, well, it's going up. You see it going up, so you look at the trend. Are you bullish or are you bearish? Is it bullish or is it bearish? Now you look at this also, so we know that in this market here, right here, this is a bearish scenario here because this is dumping. Okay, now you know that if you come to the daily, if you come to the daily, because we were in the 4-hour time frame there, if you come to the daily, you will see that here Bitcoin dumped right down to here, went here and started going up. Of course on the way it will dump somewhere, but you know that yes, it dumped here, it continued to here, it dumped again. Do we have a probability of it continuing? Yeah, this could be a good place to invest because you know that, okay, it went from here, it went up, it dumped, it may go up again because this was a very long dump. This was hell for Bitcoin, this place. So you know that it's left and it's going up. All right, so you look at the trend before you invest. Don't just invest because you saw that the price is low. Look at the candles, and I advise that you go watch that my candlestick charts video so that you understand how price works. Let's look at this candle here, for example. This is the daily time chart. We have seen here that, okay, here is just basic consolidation because it's moving laterally. We're not having a sudden increase, we're not having a sudden decrease, but here we are having that decrease. So here we're sitting now at about 44,000. Now what we're going to talk about is the volume. The volume, and this is one of the most important things you have to know. This is the volume. These are the volume bars. This tells us how many buyers or how many sellers are present in the market. The more buyers and sellers are present in the markets, the stronger, the more the volume, the stronger the trend. So if Bitcoin is rising, like here, Bitcoin was rising here, but you see that the volume here is reducing like this, then the trend is not strong, which means this trend is not a strong trend. And once it's not strong, it means that this price here going up can easily turn and come down. We can have a sudden decrease in price or a sudden increase in price, provided buyers or sellers enter the markets. For example, as we move up this trend here, you see that the price is increasing from 44,000 to 48,000, an increase in $4,000. So if we are going up this trend, but the volume is decreasing, this tells us that this price here is only controlled by few people. So the lesser the volume, the easier the price can be controlled. The more the volume, the less the price can be controlled. Thus showing that if volume is high enough, it confirms a trend. Any trend is confirmed by how high the volume to that trend is. So if we have a trend look like here, this is another example here. You see this price going up here, but you see the volume decreasing. What's that telling us? That the price can easily be manipulated. So it drops. Now, if you remember our example of the tug of war from the other video, if you remember that that tug of war, imagine that you have 10 people pulling 2 people, or if you have say 10 people pulling 1 person, it means that the volume is on one side because more people are on one side, so they can easily pull the other side. Or think of it as, say, only 2 people in a tug of war game versus 100 people in a tug of war game. That makes it possible for, that means the game where you have 100 people pulling each other, say 52 on one side and say 48 on the other side, or 50-50 even, it means that that game has more strength and it will last longer than the game where you only have 2 people or 1 person, or 1 person on one side, 1 person on the other side. It means that it can easily be manipulated if one of these people calls his friend to come and help him out. So if one person calls his friend, say, to come and help him out to pull the other guy who is only 1, it means that that other person can easily lose. But in a game where we have 50 people on one side, 50 on the other side, even if 10 more people add, it will not influence as much as though it was only 1 person by the other person. So that's a basic way of seeing it. So this volume here is very important to confirm your trend. When you look at a trend going up, it has to be confirmed by the volume. Here, you can see here, this we have a rise in price. Now here the volume is not increasing nor decreasing, but at least that one is enough than when the price is increasing and the volume is decreasing. If the price is dropping and the volume is increasing, it can also bring about a sudden increase in price. Sudden increase or decrease, because both sellers or buyers can enter. But in this case, most likely you will have buyers entering the market. So you confirm every analysis with the volume that you see. That's basically it. Now, you also have to factor in how much of that volume is there. If you look at, say, here, you see that the volume is very low. This is 100k, here is 200k, here is 300k. So high volume indicates, still confirms your trend. But low volume can kill some people. What I mean by this is when people see Bitcoin coming here to 28,000, I know that most people are subscribed to this channel are mostly, say, bulls, because if you stand for Bitcoin going up, you are a bull, a Bitcoin bull or a crypto bull. But if you want Bitcoin to drop in price, you are a bear. Someone might be like, why would I want Bitcoin to drop in price? Because people actually trade this. They go to this leverage trading I was talking about, which we will see sometime in the future, and they go and short Bitcoin. Now, shorting Bitcoin means that if Bitcoin drops in price, the more it drops, the more you make profit. So if it drops by 10%, you're making a 10% gain. That's what Bitcoin shorting means. So if the more Bitcoin is dropping in price, the more you're making profits. If it increases in price when you are shorting, you will lose. The more it increases, the more you are losing. So in, say, a stop loss scenario, the person shorting Bitcoin will put his stop loss above. So let's say I was here and I wanted to short Bitcoin. The more it goes down here, the more gains I make. So I will put my stop loss maybe around here. If it turns around and increases like this, my stop loss will sell my position immediately. As it crosses where I wanted to sell it, that's the stop loss, it will sell that position immediately. So I would have lost this little percentage here. Yeah, I would have lost this little percentage here, but I would have avoided the situation where it went up here, because if it goes up here, then I may lose everything that I have. But the more it goes down, the more you gain. So there are people who also pray that Bitcoin should drop in price. The more it drops, these people make gains. Okay, so in crypto, you can actually win both ways. You can come here and you start shorting Bitcoin. As you short, as the price decreases, you make more gains. And when you see that the price is about to increase, you turn and you start long, like you go long. To long Bitcoin means you hope that the price will increase. So the more it increases, the more gains you will make. And you start longing Bitcoin and you start making, and you make gains. The more it goes up, the more gains you make. So you can win both ways. You can win as the price increases, and you can also win as the price reduces. So here is where you have to always look at this volume, because here there were some people who wanted Bitcoin to go lower. There are some people who thought Bitcoin will come to $15,000. Bitcoin did not. Bitcoin stayed here at, this was the last place, $28,805. That was Bitcoin's bottom. So imagine there was someone who bought here because he hoped that Bitcoin will go up. Bitcoin did not, so he lost all of this, hoping that, oh, there may be a turn somewhere. Here there was a turn. This person was probably happy, and it came up here, it stopped, and it went again like this. So you have to identify your trend. You have to look at the volume. You have to look at the increase in volume around here. If the volume is around here, then you know that the trend is very strong around this 200k. But if it's just even here at say 100k, that's enough. Okay, but if it's lower than that, then that's really low. So this is good volume, like here. This is good volume here. We see the volume. So this is good volume here. Yeah, you see how much volume we have here. But if the volume is somewhere here, that you should be afraid of, because it could turn at any moment. All right, so here is the RSI. Here is simply basic. Okay, now the RSI shows us when Bitcoin is undervalued or overvalued, or any other cryptocurrency, if it is overvalued or undervalued. So here you have 30 and you have 90 here. If the RSI goes to 30 or below, then that crypto is undervalued. which means it is time to buy. If it goes to 70 or above 70, it is time to sell. You could use this RSI and trade crypto. Of course, nothing is guaranteed, but you can use the RSI alone and trade cryptocurrency alone. You look at it, when it's here, you buy. Like here, you see? Here it was at about 30. So when you see it here at about 30, you buy, and you can sell here when it's overvalued. At about 70, you sell. You will make profits. Like now here, it's at 30, and I think I said this before on TikTok that this is the time to buy. Keep buying, and I also I posted that video here on YouTube. Keep buying these dips. When you see it, each time you see it at 30, buy. Each time you see it at 30, buy. You could use that as your reference point. Anytime you see it at 30, you buy. You see it over, say, 70, you sell. Only like that you will always make gain. So you can use this as one of your indicators, the RSI. Now you must be confused that what are these lines, like what do they mean? So these are the moving averages. This blue line here tells us it is the, like, say, the long-term moving average. This means that the market has generally agreed that the price for Bitcoin should be $40,000. So these moving averages, remember we are in the daily time frame. As you go zoom in, these moving averages change. So in the daily time frame now, this blue moving average is the 200-day moving average, which means the market has agreed that Bitcoin's price should be at $40,000 on the 200-day moving average. This, the purple one, is the 50-day moving average. So we have the 200-day, the 50-day, and the 20-day moving average. Now, the 200-day being the slowest moving average, the 50-day being the slower moving average, and the 20-day being the slow moving average. So this slow moving average moves faster than the 50-day moving average, and the 50-day moving average moves faster than the 200-day moving average, if my English is right. So you can also use these moving averages to know where to immediately see what trend you are in. When the 50-day moving average is going up, you know you are in an uptrend. When the 200-day moving average is curved up, we are also in an uptrend. Now, put it, when the 50-day moving average crosses the 200-day moving average from above, it is called a death cross. Never you forget this. When the 50-day moving average crosses the 200-day moving average from below, it is called a golden cross. Now, the golden or death cross, the formal meaning that we will have longer periods of drought. And in this case, I mean low prices. This was the last death cross we had. The 50-day moving average crossed the 200-day moving average from above, which means that price was below the 200-day moving average. When price is below the 200-day moving average, it means that we are in a bear market. When price is above the 200-day moving average, it means that we are in a bull market. So when we will have a bear market will be when this 50-day moving average will cross the 200-day moving average from above. That will put us in a bear market where every other cryptocurrency will be below its normal price. I always talk about Bitcoin, and someone even commented on one of my videos that, nah, dummy, you don't know anything or what. The thing is, Bitcoin could drop about 50% of its value. Altcoins lose about 90 or even 95% of their values. Some go to zero. So what you have to understand here is that this is the death cross. This is the golden cross. So whenever you feel sad that maybe the crypto you invested in is not doing well, always zoom out, come here, or if here even is not good enough, come to the weekly time chart and look at these moving averages, look at the trend, and look at if we are in a bear or in a bull market. Well, as it indicates now, we are in a bull market, and now this is just a consolidation. Everyone that will be here who is a bear, who wants to get profits off of Bitcoin when Bitcoin is decreasing in price, will start shorting Bitcoin. As they start to short Bitcoin, the price of Bitcoin suddenly spikes up. They lose their money, but if they had some stop losses, they will make some gain. So this is the original view of seeing this time chart. You first look at Bitcoins. We have looked at Bitcoin's price. We have looked at these moving averages. We have looked at the volume and how we can use the volume to confirm our trend. We have looked at the RSI, how we can also use it to know when to buy or when to sell. And somewhere here, you see that the price here was at 70, was at 75. So here, when it peaked here, when we had this peak, we could know that the next candle will go down. So here, and some of the times it is just emotion thinking that, well, it will go higher, so you want to get more profits. But what is actually happening here is that you have to always look at the RSI. When you look at this RSI, you know that this is the time to sell, this is the time to buy. When the RSI is somewhere around 30 or below, it is time to buy. When it is somewhere around 70, it is time to sell. Now bear in mind, it may come down to 40 and like here and go back up, and it may go to say 65 like here at 50 and go down. So it is between 30 to 70 that you can have your range. But you can trade using only this RSI if you wanted to start, say, trading. And this will start to teach you. You know, I started trading and I did not use the paper money stuff. I used real money. I was not into the whole trading with paper money stuff, like starting to trade and thinking that I'm not using real money. Like there are some other platforms like eToro, you use paper money. They have about $100,000 that you can use, but it's not real money. You just trade and you see how it would have gone if you used real money. So I just went into using real money already because, well, I am the fast type. Like I do not want to waste time. Anyway, so here, this is the original view. Let us go into the trading view where the technicalities can start to apply. So you come here to trading view and you click. So ladies and gentlemen, this is where the technicalities apply. Here we will talk about stuffs like support and resistance lines and why and how you can draw this line. So hope you have your cup of coffee beside you because it is going to be a bumpy ride here. Don't be frightened, I will make it easy. Anyway, so let me delete all of these lines so that we can start from afresh and we start to draw them, and you can understand everything as I have. Alright, so here we don't have volume and all of that stuff here. Here is the trading view. Here is where you place those stop losses. Like if I come here, I can place my stop loss. All of that stop loss stuff happens here. All right, so here is where you get to place the stop losses stuff, and you draw your support and resistance lines. Here you can identify key trends and how you can trade. If you are trading crypto, then here is where you get the information, or you identify where the right time is to trade. Here is also where you can identify the right patterns and where you can also get price targets on what price you think a crypto will reach. So let us begin and see what price we think Bitcoin will reach next. Let's do it together so that you don't get confused. All right, so here you will start to notice something. Price left from here, went up here, came down here, went here, came down here, settled a bit, went up here, went here, came down here, here, a bit down, here, right down, came up here, settled around here, came here. Just bear with me here. And here, this was the bear market we were talking about the other time. Yeah, after the top, this was the 64,000 something. It's the same chart, but it's just made in a way that you can draw things on the trading view tab. Now, all right, so here, what do we do? Now we understand the trend. We already know that this was an uptrend here. We had a retracement. This will be called a retracement, like it retraced back to here and it went up here. It retraced a bit, went up here, retraced. The market breathes. Like people take profits. When they take profit, this happens. It went up here, they took profits again, this happened. And here price consolidated for some time, but this was still a downtrend. This is still going down. And then we are headed back up, retracing, and we're going back up. So here, it's kind of the same thing here. If you look at it well, here, from here, let's use this. Here, it's kind of the same thing here. Here is kind of the same thing here. We have this retracement. And you may get scared here and sell. I'm thinking that you will come right down here. No, it's a retracement. What you have to do here is keep on buying, because we will go up. That's the only way it will happen. No guarantees, but that's what I think. So what do we use here to identify our trends? This is the brush that you use. You can use this to draw. So this is brush. You can use this to draw anything, like just to make these lines like this. And here is where you delete the drawings, remove drawing tools. And here you can use this to draw your lines. So this, you can draw a line like this. And you can change the color of the lines that you draw. You can change the size, make it thicker so that you see it. So here, what happened here? The price left from here. This was gradually increasing and it came here. And it came here. So let's make this bigger. No, let's go to here where we have already the price, so that we can do it as the price increases or decreases. Let's take this and start to draw our lines. Now, what you have to understand in crypto is that there are always two lines. This is one. This is another. In every market, there are always two places. This is our resistance line. This is our support line. What do these even mean? Like, what does support and resistance mean? It means that, let us say we are here bouncing up with price, trying to break above this line and go up. So let us make an example. Let's say we begin here, we are going, bouncing off, going here, bounce off, come back down here, bounce down, go back up, bounce, come back down, bounce. There are two ways this can go. Either we broke our support, because this line below is supporting us. Let me change the color. So let's put that at red. Okay. And here, let's put this one as yellow. Okay. And now here, this is the price, for example. we started here, we went down, we bounced off, we wanted to break because this wanted to break above this resistance. This is some kind of barrier stopping us from going up. When we bounced there, we came back down, we came and bounced here, and this is stopping us from going below. So this becomes a zone of support for us. This is a zone of resistance, resisting the price from going up. This is supporting the price from going down. And then we bounce off the support line, go to the upside, bounce off the resistance line, come to the downside, and bounce off the resistance, the support line. Now, there are two ways this thing can go. Either we break through the resistance, either we break through the support and come down like this, or we bounce off the support and break through the resistance and go up like this. These are the two scenarios that can happen. Now, when this happens, if we break through the resistance here and go up, we are most likely to go up here by the same distance from here to here. So you measure this like this and you put like this. So the length of the length between the support and the resistance line is the same length which we can go if we break below or above these lines. So if we break this line here, we are most likely to go up to this length here by the same distance from here to here. So if we break down here, we are most likely to go down by the same length from here to here. So you measure it like this, and this becomes your price target for the market going down. This here becomes your price target for the market going up. When the market goes up, you look at the next trend here, and you can make another price target for the market to go up or down. So you continuously make price targets as the market continues to show prices through these candlesticks. Hopefully this is understood. But you might be like, why? Like, why is it like that? Is it planned or something? And what is actually going on is, when this line tries to break above this line, the buying pressure that is here is most likely to be represented here. So the buying pressure, let's say you are here and you're trying to buy Bitcoin and every other person is trying to buy Bitcoin with you. That will show by the price bouncing off this place here. The price bounces here because not enough people are willing to buy that Bitcoin to break above this resistance line. When you do break above this line, this buying pressure here will represent itself here by almost the same or exactly the same, and it is incredible, I must add, by exactly the same or sometimes almost the same pressure that was showing here. If it breaks below, then the same pressure that was trying to break below this line will be indicated down here by this. Will be indicated down here by this line here. So this line here has to be exactly or about the same length as this bounce up or down line here. So down here, so that is how you make your price predictions for the short term. I did mention this on TikTok that I will talk about this, so that is it. That's what is actually happening here. So you might be like, okay, so can we try and see if this logic applies on these charts? Yes, we can. Let us do that, shall we? So let's cancel all of this. Let's start from this descending line, this descending trend here. So how do we draw these lines? We draw the resistance line. We can see that this came down here. These people entered and bought up this stuff until here the candle closed. They also bought from here until here, and the candle closed here. That's the same thing they've been doing. Each time it goes below, like here to 28, they buy. You see? And each time it even went down here, they also bought. Let us increase the size of this stuff for this lines. Okay, let's increase it so that you see how it goes. All right, so here, how do we draw these lines? We start from here and draw our resistant line like this. Please remember to like and share and subscribe to this channel. If you have anyone that has this kind of there are many people that don't know how this is, and most YouTubers that I have seen would rather just sell this as a course because it would fetch them more money. I took some courses here and there also, but I do not think it's like I think knowledge is to be shared, and well, the more people buy crypto, the more crypto goes further. So I do not think I should be selling a course. That's one of the things that I vowed to myself that I will not do. So anyway, if you find this helpful, please give it a thumbs up. It helps the channel out a lot, please, and share it with a friend, one or two, and yeah, so that YouTube can keep recommending the video to more and more people. So this is our resistance line here. This is our resistance line here. And how is it the resistance line? How did we draw this? We took the line. We know that the price descended here and it kept bouncing off here, bouncing off. So we take the highest bounce here and we take it from the body. You see the body of the candle. This is the body, this is the wick. Some people draw it from the wick here, but we drew it from the body. So that is the body. Okay, so here it crosses here and it comes somewhere. You can still just do it like here, it's not a must, but I like to do it long so that I can see it from a large scale. I can see it longer. So here, all right, so how do we draw the support line? So this is the resistance line. We can see already here it broke down. So the resistance line can also turn to be the support line. Here the price kept bouncing. When it came here, it did not, it closed below, and I will talk about that in a minute. So here we have the resistant line here. Okay, and we need to draw the support line.
As you might have noticed, I do all of these tutorials freestyle. Like, I do not write some list and follow. I just do it as it comes. I think it's more natural that way, you know. I get to think what you may be wondering, what questions you might have. So the support line begins from here for the support, and let me make this bigger. So the support line begins from here. You can get it from here. That's the last candle here. From here through here, you just make sure that the candle is touching as many bodies as it can so that you can get the trend. So the support line begins from here until here, and the resistance line begins from here, as we had it before, to here. So if you notice, this looks more like a falling wedge. It's like a wedge falling like this.
So what you do here to get the price target here, because we had this break off here, so let's say you invested somewhere here. Let's say you invest somewhere here because you see this pattern. This right here is a bullish engulfing pattern. This right here is a bullish engulfing pattern. This is a bullish engulfing pattern. If you've watched my other video, you will understand this. So let's say you invest here, and you want to know, and this candle closes above this candle. Let's say you wait until the next candle to see if it can close above, and this candle closes above here. So how do you know to what extent the price can go? What you do is you take the largest you take the largest part of your falling wedge, which will be here, and that part of it is here, from here, because the price touches it here, and here. This will be the largest part. So you take from here to there, and you keep here where the price, where we have this candle closing here. So if we pull this here like this, then you see exactly, it is exactly where the price reached here. So this is your price target. Now by this, you know that you can, if you bought here, you can ride this wave like this up to here. So you can buy here and keep your selling order here. It has to close there, like the price has to reach this place. From here you can make another price target using these candles. Hopefully this is understood. If you have any questions, you can let me know in the comments. In this wedge, in this price increase here, so in this price increase here, there is also something that you can do to get your support and resistance lines. You can also draw this like this. You just have to keep identifying this. There is no universal way to draw these lines. You just need to draw them and have a support and resistance resistant, the support and resistance line, to know where a price of a cryptocurrency is headed. Yeah, so here we have those two bodies that touched here and here, and these are the highest parts of our trend. So here we have a rising wedge. Here we had some sort of falling wedge here. You see this wedge? So here we had a falling wedge like this. We could put this like this, falling wedge like this. So here we have some sort of rising wedge. There is no universal way to draw these lines. You just need to draw them and see how your price is supporting, because when you start seeing those bounces, don't worry, this will come with some time and experience. As you keep on drawing this, you start to recognize some patterns. Like here, I see some patterns that you may have been looking at this same graph, this same chart, and you are not seeing. So as the price comes here, it comes down to test this one, but it does not. It closes before it reaches here. It goes back up here. Yeah, this could be, this is it. So here we have a rising wedge like this. We see that the price left from here and it came here to test this one and break out to the upside. It didn't. It came back down to retest, when came here to and it retested this resistant line. So the line above is the resistant line, the line below is the support line. So it went up again to retest it. It did not. It came back here, to retest the support line. It did not reach the resistance line and it broke below the support line and it closed below. This indicates that the price will go down. Yeah, it will keep going down for some time. That's what we will be having. So here, what do we see? We see that the price moved from here to here, so we can count like this is the widest part of our triangle, so we know that the price will go like this. So from here, from this line, the price had to go down here. Do you see that that is exactly, somewhat exact here? So here we can draw another line here like this, and we know that if this candle closes as it is like this, if it closes below here, if by the end of today in the daily time frame, remember we're still in the daily time frame, if this closes below here, then we are headed for doom. Yes, we will continue to go down. If it continues to go down, then we will continue to go down with it. Yes, so that's basically how you draw these lines. If it continues to go down here, we will continue to go down with it, because this is our support line here. This is our support line here. How did we get this line? This line here is the length of widest part of between our support and resistance line here. So if this resistance line broke, if this price broke above this resistance line around here, we will take this line and put here. That will give our next price target, which will be $60,000. But since we broke below it, we need to take that and put here where it broke, and we'll get our next price target, which is $43,000. So from here that it broke, you know that this price must come to $43,000. Yeah, everything remaining equal, it has to come down to $43,000. If this still confuses you, which I do not think it should, do not worry. As you start to do this, you will understand it as you do it. If you have any comments or questions, you can ask me below, and I can do another video to answer some of your concerns specifically. So that's it here. And here again, we could draw another line. Yet this is just about drawing lines. So let's open this up. So here, what do we see? We see that this price went up here, it consolidated here, but consolidation means that it's trying to go up and it's not. So we can draw a line here on top of that body that failed to close above, and you come like this. Now you will begin to notice something that is kind of creepy in crypto. This did not close above this, and here it did not close below it. Here it closed above, so the price, when it closes above, as we said, the price goes up. So you see that here it closed above, here it took the price that closed above here and pulled it back down. Here it pulled it back up, and here it closed above also, and this is the result of it. This it also closed above, but generally you see it going up. Now you begin to see that these support and resistance zones are not just for some one place. You can draw this line right up to here, and you will see the exact same thing happening. Do you see it? Do you see? Here it closed above, we got it up. Here it closed above, it came here and it went up. Here it closed below, it came down. Here it closed above and it went up. Do you see? So these lines don't only influence the particular zone or section that you are targeting. Look at here. This price here, we can pull it here. You see? So this becomes a significant zone of support. This becomes a significant zone of resistance because it has been affected time and time again, even here. It has been affected time and time again, even here. Now, Bitcoin came down to 42,000 and it's going back up. And it's going back up. Yeah. Hopefully you guys understand. Okay, so let's pull this one here and you see something. And you see that here it did not close below. If these here closed below this line, this would not have happened. It would have gone down here. So it happens all throughout the history of that crypto. When you draw these lines, it's not just by some accident that they happen this way. When we'll be treating the Wyckoff's distribution pattern, you will understand that most of what you see in crypto is manipulation. Remember we said that whales make up 85% of the capital in crypto. 85% of this capital is done by whales. So they have the upper hand. They have the final say. Whatever you and I do, that's just say nothing compared to what they put in. Which is why on some of my videos I say follow the money. Follow the money. This will open up your mind to see patterns. The same like Satoshi Nakamoto did. Bitcoin came down to 42,000 and people have bought. Do you see that? People are buying Bitcoin and now it's back to 43,000. Now it's back to 43,000. Yesterday was some kind of consolidation. We had a consolidation here. This was not huge price action, but this is a lot of price action and this is a lot of selling pressure in the market. And here, the same thing that happened here is what is kind of happening here. If we close below this line today, this line that we just drew in this video, if we close below this line, that Bitcoin is headed for the gallows. We are going to go down to at least 38,000, at least 39,000. Now there is another thing that you can use to draw these lines. When you look between these candles, if you see this and you see this, you bring your cursor around here, you'll see that the line formed by your cursor, most of these candles will respect that line. For example, let's see. If you have like from here to here, you draw like this. Yeah. Okay. Now here. Okay. Look at this. Look at it. This one closes below the line you just drew and the price drops. This one does not close above, but in the next candle it closes above and the price continues to increase. This closes above, the price continues to increase. This closes below, the price reduces. This was a fake out. This was indecision, as we discussed in our other videos. Now bear in mind that this is also a bearish engulfing pattern. To know engulfing patterns, know that any candle that comes before a red candle, if we have a bullish candle like this, so if you have a bullish candle like this, bullish, this one is a bullish candle, this is a bearish candle, and this will give you a bearish engulfing pattern. this will give you a bearish engulfing pattern. Each green candle, if you have a full green candle and a red candle, a red spinning top like this, and this green candle comes before the red spinning top, this will be a bearish engulfing pattern. Bearish means price will drop from here. If this was reversed and you have the red candle in place of this and this green and the green candle in place of this spinning top, that will be a bearish engulfing pattern, which means bearish engulfing patterns start with a green candle and end with a red candle. Bullish engulfing patterns start with a red candle and end with a green candle. So these lines here. Now, what else do you see? Because I see a lot of things. Do we see now that Bitcoin that came to 42,000 just some minutes ago was bought until it is now at 43,000? So we see that this is a market in action. Some people have lost a lot of money here. Some people have also gained a lot of money here, because there are some people who are shorting Bitcoin right now and they are making money. They'll keep on making money as long as Bitcoin is going down. But now that Bitcoin went up here, their stop losses must have been triggered, and they are out of the trade with a lot of money from here to here. Okay, now that's because we see this in the daily time frame. Let's go to the 4-hour time frame now, shall we? So this is the 4-hour time frame now, and this is the start of the next 4 hours. This is the end of the past 4 hours. So this 1 here, 2, 3, 4. This was the previous 4 hours. This is the start of the next 4 hours. The start is 4 o'clock. So we have 5, 6, 7, 8. For the next 4 hours, 9, 10, 11, 12. For the next 4 hours, 1, 2, 3, 4. For another 4 hours. So it's 4 hours each. Each candle here represents 4 hours. Now, it is in this 4-hour chart that we see some trends. Look at it. Look how beautiful this is. You can see the lines that we just drew some minutes ago, and everything is in place. You see that this, since we were in the 1-hour time frame, that could not be well seen, but now that we zoomed in, you see everything perfectly. You see how it was going up, going up here, and struggles and come down, and here it almost closed here. The candle here almost closed below. It didn't, and it went back up here. Yeah, and it went back up. This candle here is just on the line, and it went back up here until here it tried it again and it came down. Now know something, the more this is not touching here, because voila, that's how it's supposed to be. So know that the more it comes to the more it tries to break through that support or resistance line, the more likely it is to break. In this scenario, we can see that the same scenario playing along here is the same thing that is trying to happen here. There is something that I want you guys to look at. This, when we started off, our tutorials, this candle here did not close below this line. This means that if this closes below this line, we are headed for doom. But most likely it tested that line. You see that this candle, the wick, you see the wick here, it means that it came down here, but buyers bought it back up to here, which means that the market people, we have buyers out there. Remember we said in our other tutorial that the presence of wicks indicates the presence of buyers in a red candle, and the presence of wicks in a green candle indicates the presence of sellers, like in this candle or in this candle. Do you see something peculiar about this chart? Let me just draw it out, and I hope some of you saw it already. But do you see this? It came like this, made this, came like this, make this. What letter of the alphabet does that look like to you? Came like this, made this, came like this, did this. What letter does that look like to you? An M. That's a bloody M. Now you see it, and this M's consolidated here and came here and made another M. Now these M's are called, or an M here is called a double top. You notice that each time it makes an M, the price decreases. Do you notice that? When it makes this M and the second M and the second arm or leg of the M, the price, it goes rapidly down in price, followed by an uptrend. Let's go to another perfect M. We have this M, this is the other leg of the M. It came down, followed by another uptrend. The difference between this point, the highest point of the double top, let's take this out. Now, the difference between here and the lowest point, this is the highest point, so you take this difference, take that. So this is the highest point of this double top. You take this difference to the lowest point of this double top, will be about the same distance that the price will go down. Do you see that? Hopefully you can. So this, from here, which is the highest point, to here, which is the lowest point, will be the same distance that the price will go down. So if it went down here and it kept going down, it's because here we draw another line. So we draw a line like this. Do you see what happened? It closed below that line. When it closes below the line, you know that the price will go down. Remember, the entire trade is correlated, so it will respect your line all through. Even here, it will respect that line. Even here, you see this candle, if your line was here, it would have closed above your line, so it will go up. This was a fake close below the line here, so people who wanted to short, the price betrayed them and went up. Now do you see this? It closed below the line, so you come out of this. So here, when you see this, it formed here. If you wanted to short here, then this would be a good opportunity for you to short, because you know exactly that the price will go down until here. If it closes below, then you know that the price will continue to go down. Now, to know how far down it can go, you have to zoom in again to the 1 hour time frame here. Okay, here we are in the 1 hour time frame. You immediately see the big N. Do you see that? Do you immediately see this? Do you immediately see this? This is going to be followed by a massive pump. The only way that this will not be followed by a pump is if we continue, if we close below the line we drew here and we continue to go down. That's the only way it will not be followed by a pump. Because generally after a double top like this, we need to have a double bottom. Of course, we need to have another double bottom somewhere like this and like this, and after every double bottom is followed by a significant pump. The difference between here, the top and bottom of it, will also be how far it has to go. But this is just me guessing. If we indeed have a double bottom, that is how it's going to work. You can take the price after the double bottom, and then you will know how far down it will go. Another thing I wanted to show you guys before we end this session is a head and shoulders pattern. So after this, when you have this that closed here and you have a retracement like this, and you have this, you come here and you have another retracement, this will drop down like this. So here is like our head and shoulders pattern. So here, what do you see? The difference again from here to here should be the same distance from here to here. Now do remember that these patterns only show with respect to what time frame you are using. So I may see a pattern in the 4-hour time frame, but in the 1-hour time frame that pattern is invalidated, like it's not true. So like in Cardano, I came to Cardano, that's ADA USDT, because it shows a clear head and shoulders pattern here. So here you see a head and shoulders pattern. This is like the head of it, this is the head here, and so you see a head and shoulders. This is like the shoulders of the head and shoulders pattern. These are the shoulders. So you have a head here, shoulders, and so the distance from here, from the top of the head to the bottom, is the same distance to which that the price of that crypto could go. So here, let's make that one thicker. So it could go like this, and it's exactly what we see here. So okay, so here you see here that we have that, and if you take that from there to here to where we had the breakout, then you expect the price to come here before we have any kind of we have some sort of retracement. Then here also, if you draw a line like this with respect to the pattern that you have drawn, you'll see that the entire crypto should obey that line. So if this coming up here now closes above this line, if this candle closes above this line, then we are headed for the upside. Remember, this line here was the support of this trend here. This was the support. This was acting as support here. This here was acting as support. But when we broke that support will become the resistance. So when we broke this support here, it will become the resistance when we break it. This now has become the resistance. This now is the support. If this candle closes below here, we will form another support somewhere here, and this now that is our support here will become our resistance. So if we close above it, it will become our support. If we close below it, it will become our resistance. So the more a cryptocurrency accumulates and tries to break through a support and resistant line, the more that support or resistant line will become strong. So if we keep bouncing off here, bouncing off here, trying to break out, when we finally do break out, that resistance line that was so strong to break through will become a very strong zone of support. So this is what you have to keep in mind. Now that we are struggling to break through with Bitcoin at 52,000, so this is Bitcoin, BTC here. Now that we are struggling, we came down this road and we have rallied up to 52,000 here. Now 52,000 is our zone of resistance. So let's draw a line. So this now is our resistance. Do you see how it follows it clearly here? This bounced off it, this broke through it. We had this dip here, this demonic dip, and it has then become our zone of resistance, the same zone that was our support before. Do you see that? So our support can become our resistance, and our resistance can become our support. So keep that in mind as you go about this. If you have any concerns, please let me know in the comments. If there are some things that I explained which you did not understand, please let me know. I know the video has been a very long one, but videos like this, there is no other way you can make them shorter. They only have to be as long as this. So Well, we'll see where Bitcoin goes from here. I will try that this video should be out on YouTube by tomorrow. And so this is our candle here. Yeah, we bring it down a bit here with reference to this. So this was a previous zone of support. This was a previous zone of support here. We supported here. This was a zone of resistance to here. Became the zone of support, broke through it, went back up, and it became a zone of support. It supported here, it supported here. So you see the number of times that it is supported here makes the line stronger as a resistance or support line. So any support or resistance line is only as strong as the number of times it has been tested. So like here it was tested here, tested here. So we have 1, 2, 3, 4, 5 here, not really, but yeah, tested here, 6, even here, because here it broke, but we went back up and closed above. We broke, we went back up and closed above until here that we finally broke and closed below. So this is not a good sign. This is a very bad sign. If Bitcoin does not close above this line, we are headed for doom. That's basically it. There are other things that we will talk about as we go through, as we go ahead in our understanding of these candlestick charts. The truth is, I can't squeeze everything into one video. It will just be too long for people to watch. But as we go ahead, there are some things that I'll be bringing up and making them clearer. I really hope you enjoyed the video. I really hope so. I hope you gained some knowledge which you can use. Here we see if we close above here, we know that this could be a good trade. If we factorized our volume and it is correct, then this would be a good trade to make. But I think it will come down again, because you see that this, even the moving average here is also trying to form an M. This was some sort of funny W here and it went up, so this will want to form an M. I think it will come down like this, which means we could see 41,000 Bitcoin. This is assuming that this line does not hold. If it closes above, then we will not see that, most possibly. But if we close below, we could see 41 or 40,000 Bitcoin, because 40,000 Bitcoin is a very strong zone of resistance if we look at it from here. If we take the line from here, yeah, so this will give it $40,000 Bitcoin, $40,800. So if it closes below here, we know we are headed for the downside. And so let's just see. Let's see how it will turn out tomorrow. I will make a YouTube short or a TikTok video talking about this. But thank you all for watching the video. It helps me out a lot when you watch the full video. That is, if you did until this point, then I am really grateful that you did. And if you're new to my channel, please give it a like and a subscribe, and share the video to your friends. That this is the new hub for anyone who wants to learn and understand cryptocurrency in the most simple way possible on the tube. So thank you all for watching the video, and hope I see you next time in my next video, where we will be looking at what a blockchain is, and we will be talking about the best cryptocurrencies to invest in with respect to their blockchain. So thank you all for watching the video. I really am very grateful for you guys, and see you in the next